What's going on, family? What is going on, guys? Yes. What is up, my family? How are you guys feeling today in the Chizzy chat? Grand evening to every single one of y'all that's rocking with me tonight, family. Go ahead and drop those locations in the Chizzy chat. Go ahead and drop those locations in the chat, family. Let me know where you're tuning in from right now, because we are live back with another Asian session with your boy Abel, and I'm super excited to be here with every single one of y'all as usual, because this is an opportunity for us to get together and pretty much just have discussions around trading, specifically the Forex markets, and pretty much just giving you guys my insight on how I'm going to be approaching the markets going into tonight and going into tomorrow morning, right in New York session when I normally actually trade. But super excited to be here, guys, because we actually had a lot of very important news that came out today that we're definitely going to talk about. We have to be up to date, guys, with current sentiment of the market based off the actual release that we did experience today. So we're definitely going to go into that. And then, like I said, based off the sentiment that I believe we can experience, that's pretty much going to position us in a way to take advantage of certain opportunities, guys. But overall, I'm so happy and grateful to be here with every single one of you guys tonight. Hopefully, I can go ahead and provide you guys with a little bit more value today, right? If I can give you guys just one extra sweet nugget, one extra sweet gem every single time you guys come on here, then you know what? I feel like that would be absolutely amazing for us, guys. But overall, like I said, it's going to be a phenomenal stream here tonight. And I look forward to, like I said, just providing you guys with massive value. All right, but let's see who we got in the chat today. We got New Jersey in the building. What is going on? We got Michigan, Vermont, 5th Ward, Texas in the house. What is going on? Shout out to you guys. I see my brother Tony in the building. What's going on, Tony Gold? I see you. We got New York in the building. We got the Boot present. What's going on, Z? We got Colombo, Sri Lanka in the building. What is up? Right, New York City in the house. Chaos, I see you. What's up? We got Jamaica in the building. Augusta, Georgia, Chicago, New Mexico in the house as well. Let's see what else we got here today with us. We got Houston, Chucktown, Houston, OKC, North Carolina. We got Las Vegas in the building, New York City, Jamaica, Mexico, Brooklyn, Colombo, Sri Lanka, Ohio. My brother G, I appreciate you, bro. What's going on? Baltimore, Maryland in the building. We got Anaheim, California. Shout out to you guys out there near Disneyland. I see y'all. We got Trinidad in the building. Big Bert in the house as well. Shout out to you, Big Bert, and my Baltimore familia out there. I appreciate y'all. We got Chicago, St. Louis, Chicago, Maryland, Bull City, right? China in the building. We got Staten Island, New Jersey, Arizona, Mexico, Suriname, Florida, Algeria in the building, Bahamas, and Southside Chicago as well. Super excited to be here with every single one of you guys tonight. Like I said, welcome to tonight's session. And without further ado, let's go right into the value. let's get right into the sauce, because I don't want to be on here. I'm gonna be honest with you, I don't want to be on here all night tonight. So we're gonna get straight into it, break down, like I said, overall fundamentals, sentiment, and then get into the technicals, and then leave you guys overall with that going into tonight, family. But again, we did have major news that actually came out today, right? And this major news, guys, was actually a very, very shocking number that actually came out. Okay, so when we're looking at core CPI and CPI, which again measures the change in the price of goods and services, aka it also shows us the inflation, right? How inflation is overall. And overall, yeah, we've been experiencing, guys, CPI, at least for this reading, we actually seen CPI go lower. Now, I told you guys that there was a chance for CPI to come out lower, but I was still expecting it to come out closer to still around 9%. But the market said, nope, not today, buddy. All right, we're going to go ahead and actually drop to 8.5%, guys, right? All right, so big shout out to my brother Bert. Thank you, Bert, for the big 20. I appreciate you, my brother. Thank you so much for supporting and sponsoring the channel, my brother. I appreciate you. It definitely means a lot to me for you to go ahead and just support the channel. So anything you need from me, my brother, any pairs, anything you need analyzed, let me know, and I got you for sure. All right, we also got Mr. Golden Arms, super supporter. What's going on, Mr. Golden Arms? I appreciate you as well. Welcome to the gang. Welcome to the family. Please go ahead and send me a message via Instagram so that I can get you added into the private inner circle chat, right? For anybody that has a membership here through YouTube with me, you guys get added into a private chat, right? So Golden Arms, go ahead and send me a message, and I'll see you in the chat tonight, baby. Let's get it. I definitely appreciate all of y'all that do support the channels. It definitely means a lot to me tremendously, guys. But overall, let's go ahead and get back into this, right? So again, we did have core CPI and CPI that actually came out. Core CPI, guys, year over year came out at 5.9%. Now, they were actually expecting an increase in core CPI, but it actually came out pretty much the same as the last CPI reading. All right, so CPI, though, is pretty much the biggest shocker here, right? In my opinion, right? CPI is a big shocker, guys, in terms of how this data came out. Because we were actually, previously we were at 9.1%. They were forecasting it to come out at 8.7%, and it actually came out lower at 8.5%, guys, right? So that in itself, just based off this release, is now showing us that at least for right now, we might have found a plateau for inflation, right? And we're going to get a little bit more into that as well when we get into the charts. But for right now, guys, based off of this type of data that we just seen, right, we're across the board for CPI. We actually missed projections and came out better than expected. We have to understand what type of sentiment this could possibly lead the market into, okay? Because this was the big deal, guys, for this week. Like, this is the one that every trader, investor in the world, any professional trader, investor in the world, they're all eyeing CPI. Any big corporation, big institution, the big banks, guys, the government, everybody, the Fed, everybody over here that is in the financial sector, right, was absolutely paying attention to how this data actually came out. Okay, so as of right now, with seeing CPI come out at 8.5%, right, comparing it to the last reading of 9.1%, and we're seeing it actually go backwards now, what do you think that is going to cause the market to react in, right? What type of sentiment, family, would the markets be in based off of this type of data release, right? Let's see who's actually been paying attention on the streams, right? I mean, pretty much almost every stream that we host here, right? We pretty much go into all this information, all this valuable fundamental, sentimental analysis, and then we get into technicals, right? But what type of sentiment is this going to cause, or is this going to pretty much benefit the most? Risk on assets or risk off assets? Risk on assets or risk off assets, right? Let's see. Let's see, it didn't auto renew. I'm ready in the chat. Oh, big. Let's go, Mr. Golden. Well, I appreciate you for renewing as well. Definitely means a lot to me. Right, Euro USD good along now. We'll get into Euro USD for sure in a second. I got you, Sahil. Right, we got Chicago in the building. My brother Christian, what's going on, dog? I appreciate you. We got Orlando, Florida as well. But again, the question is, guys, shout out to you guys out there in Tampa as well. Is this gonna more so cause the markets to be more risk on or risk off? Risk on, risk on, risk on, risk on, risk on. Brings hope to the economy. Risk on. right? Let's see. Risk on. Risk on. Okay. Okay. Please hit the like button. Thank you, Martha. I definitely appreciate you. Yeah, family, go ahead and smash the like button. Definitely does me a tremendous, tremendous favor if you do it. Just because it helps me actually go ahead and reach out to more people. You know, again, one of my goals, I say this every stream, but one of my goals is to be eventually one of the best, biggest Forex YouTubers in this space. And it's mainly going to be based off the testimonials that I'm able to create. And you guys are simply smashing the like button. Definitely helps out tremendously with me getting closer to my goal, right? So allow me to get you guys closer to your goals when it comes to trading, but also help me get closer to my goals when it comes to actually going ahead and growing this community, right? I appreciate y'all. Love y'all for that. Right, but yeah, guys, risk on, right? This type of release is going to cause the risk on assets to absolutely gain strength, right? Now, so if we look at the markets and we come over here, guys, and we're going to get into the dollar index, and again, I'm going to give you guys my predictions on what I think can actually happen on a lot of our favorite pairs for sure, but we're going to get into there. Again, guys, if you guys are new to my streams, if you guys are new to these sessions, just one thing to keep in mind. I am very, very big into fundamentals. I'm very big into sentimental analysis, right? So before we get into the technicals, before we rush into try to marking up a chart, I need to figure out what, from a fundamental perspective and a sentimental perspective, what the hell the market could do tonight, right? So I like to do this because it really gives me a heads up, right? Because when I think about quote unquote, you know, trading with the banks, I'm more so understanding it from now how the banks are, right? Because the banks are making decisions based off the data. Okay, banks are making decisions based off the data, right? So if I'm able to also take the same exact data that the biggest institutions, the best traders, investors in the world have, right, and we're able to create a bias from the sentimental and fundamental perspective first, it usually gives us a much better idea of where the market can actually go, right? So that's just for all you guys that are newer to the channel. Just be aware of that. You know, I definitely break down a lot of fundamental and sentimental analysis because you need it. You need it, right? You're not going to be profitable only understanding technicals long term. It's just not going to happen. There might be that, you know, maybe one of you guys or a few of you guys might be a part of the 1% that can actually become profitable, you know, with trading solely technicals. But even then, you know, I don't care how successful you are. You should always want to continue to get better, and you should always want to master every aspect of trading, right? Not just technical analysis, right? It just puts you in a much better position. All right, so now back to what we were saying, guys. So overall, we are risk on. All right, at least based off the release, right? Now, risk on assets are what, right? What are considered risk on assets, guys? All right, we have stocks. All right, or I'll put indices just because I know a lot of you guys are more probably familiar with the word indices, especially because that's what a lot of y'all trade. Right, we have crypto, stocks, indices, crypto, right? We have commodities, right? Anything that is considered a riskier type of asset to invest into, those are considered risk on, right? Even things like even real estate, right, could be, you know, could possibly fall under that category as well, right? These type of plays, guys, where, you know, based on current market conditions, a lot of people are either going to go heavy into them or they're going to shy away from them, right? If we're in risk on type of market conditions, then yeah, you know, these things are going to benefit the most, right? We should see stocks go higher. We should see indices go higher, crypto go higher, commodities go higher, based off of the fact that we had this data release right here. Okay, and this is something that, again, if you guys were literally on the call last night, right? If you guys were on the call with me last night, what did I tell you guys last night about the numbers? Who remembers? I know a lot of you guys probably remember. I know some of y'all might actually, right? But what did I tell you guys about the numbers and if it actually came out at 8.7 or lower? Who remembers what I said? Because the market did exactly what I said it would. All right, because yesterday, guys, when we were talking about this last night, I told you guys that if we were to come out far lower than the 8.7 that was forecasted, that is going to trigger risk on sentiment. That is going to trigger short-term, specifically, shout out to you, Jeremy, right? Short-term risk on sentiment. Well, let's go take a look at these assets, guys, and let's see if risk on actually came into play, right? So again, risk on sentiment is going to benefit stocks, indices, crypto, commodity. Let's go take a look at each one of those, right? So let's go just take a look at the indices and looking what the market did today. Okay. Risk on. Does this look like it's a more so favoring risk on type sentiment? Right? Did the Nas 100 actually increase off of that release? Yes, it did. The S&P 500, did it increase off of the actual release? Yes, it did. It went flying. All right. And then we have US 30, similar concept. Did it increase off of the release? You best believe it. Right? It definitely did. Let's go take a look at other assets, right, as well. Gold. I mean, not gold, but the dollar. What did the dollar do? Right? Well, the dollar is not risk on. Right? The dollar is considered risk off. Right? So since the market sentiment overall, because of the actual release, was risk on, that's why everybody was selling the dollar. Why? And this is a very, very important nugget to understand too, family, right? Like, this is a very important nugget I'm about to give y'all, right? But we have to understand, if the market is risk on, how can people go ahead and invest into risk on assets? If we, and I want you guys to answer this as well, right? To the best of your abilities. Again, there's no, I mean, there's definitely wrong answers, but at the end of the day, guys, when you're learning, it's very important to at least answer, right? To see if you were right or wrong. This is good practice. But let's say we were going from risk off sentiment, which is what we were in for the dollar for a while, and overall, we're still very much risk off, right? Look at this market. This is risk off, right? Seeing the dollar gain value, risk off, right? But when we see the dollar lose value, risk on. So the question that I have for you guys, right? The question that I have for you guys is, if we're going from risk on and we're now going to risk on, or if we're going from risk off to now risk on sentiment, right? Which means now it's time for investors and traders to actually go ahead and start purchasing assets, start getting into certain assets for the period in time. How can people or traders or investors actually invest into these assets? How can they do that? If they're going from risk off, right? If they're positioned heavy in the dollar, right? Whether it be the actual currency, they're just sitting on fiat cash, or they started investing into government bonds and things like that, right? If you're going from risk off and now you want to start investing because of current market conditions, and now you want to take advantage of risk on assets, how is that possible? Very simple. You're taking your US dollars and you're going and you're purchasing an asset with that. But as you're taking US dollars, and as a majority of traders and investors start to think that same way, where they're now starting to liquidate their cash to start getting into various assets, the demand for the dollar starts to decrease. Right? Because when we are risk on, the demand for the dollar is not as high, because it's still the US dollar. Guys, cash is trash unless there's about to be a market crash, right? So cash is trash. Normally, it makes no sense to sit on cash unless we're experiencing risk off sentiment. If we have risk off sentiment, that is the time to go ahead and load up on cash, because when the market shifts back to risk on, you want to be as liquid as possible so that you can go ahead and buy up all these cheap assets, that are now out there. So the way that they're able to do that, though, is again taking that cash that they had and getting rid of it. As they start to unload the cash, right, that is making the demand for the dollar become weaker, the demand for the actual asset to increase, and that's how we see like the flip-flop effect actually happen. Typically, more times than not, it's either you want to be holding currencies, right, or you want to be holding assets. right? I know this is disgusting drawings, but you guys get the point, right? It's either as an investor or a trader, it's either we're going to be sitting on cash or we're going to be using that cash and putting it to work. But depending on what type of asset class is in demand, whether it's cash is in demand or whether it's the asset that's in demand, that's going to cause these markets to absolutely react. And I hope you guys been getting this, family, because we've been talking about this stuff now consistently, probably for the past 3 months. I've been live on YouTube with you guys, and we literally been talking about the same exact stuff when it comes to fundamental and sentimental analysis. So I know a lot of you guys are finally starting to get it for sure, right? But let me know in the chat, family. Drop a 3 in the chat if you are really starting to get this, right? It's one or the other, right? It's either, again, people are going to go cash heavy, which is going to cause the indice market to drop, or we're going to go indice heavy, which is going to cause the dollar to drop. Which one do you think is going to happen next? That is the question that we have to ask ourselves. And that is pretty much what we have to figure out when we're trying to figure out sentiment in the market. What is the market thinking? How are investors approaching? What is smart money thinking? Are they more so optimistic of the overall markets? Right? And that optimism is going to lead them to be risk on, turn the risk on during optimism? Or are they now reacting to the markets in more of a risk off manner? And now they're playing it safe because there's a lot of fear, uncertainty, and doubt in the markets. Risk off occurs when we have a lot of chaos in the world, a lot of fear, a lot of uncertainty, and a lot of doubt. Risk on occurs when there's a lot of hope, right? When the market conditions are calling for it. Another thing that you guys can start to keep in mind as well, right? And you guys could write this down. This is very important because these are words you're probably going to hear often, right? Hawkish and dovish, right? Hawkish and dovish. Write those words down because you're gonna hear these words very often, especially if you're really trying to get into fundamental analysis, right? But hawkish and dovish, guys, are just ways to pretty much give an idea of how a lot of these political figures, right? A lot of these Fed committees, a lot of these people that make decisions in interest rates. That's pretty much just telling you how they are or how they are approaching the markets overall, right? When you hear say Fed committee is hawkish, that means that they're planning on continuing to raise and hike, or they're continuing to raise interest rates, right? When you hear hawkish, that means they expect interest rates to continue to increase. When you also have a committee that is hawkish, that is also going to lead to more risk-off type of environment, risk-off type of assets. Because as interest rates go up, less and less people are going to be spending towards assets. That's just a reality. Right? Because now it's going to be a lot harder to get access to capital, and it's going to cost more to get access to capital. Okay? Now, the other one is dovish. When you hear, people on TV or, analysts and economists talk about, oh, I'm dovish or this person's dovish, that pretty much means that they're expecting the markets to lower rates, right? When we have a dovish committee, that means that they are overall expecting for the interest rates to drop. Interest rates dropping, or when we have a committee that's ultimately dovish, that is going to cause the markets to fly, at least the asset markets to fly, right? So that is risk on. So hawkish, risk off typically because we're lowering rates. Dovish, risk on, or no, hawkish is we're actually raising rates when we're hawkish, right? So that is risk on or risk off. I just confused the hell out of you guys. Give me 1 second, right? When we are hawkish, they're raising rates, which leads to a risk off sentiment. When they're dovish, they're lowering rates, which leads to a risk on market. Okay, so risk off, hawkish, risk on, dovish. Right there we go. I said it. I finally got it out. Right, but that's just something else that you guys are gonna hear. So I just wanted to give it to you guys so you guys understand how to play it. Right. But looking at this now, guys, right, let's see what we got here, right? So overall, looking at what the dollar did, right, based on what the dollar did, okay, because it literally happened right when news actually started to come out. What would we say, or what could we consider the market sentiment was during the actual release? What was market sentiment that actually caused the market to drop? Again, I'm asking you guys a lot of these questions because I need y'all to know this stuff. right? But what was market sentiment that caused the dollar to drop? Who knows? Let me know. Answer this in the chat, family. There we go, St. Jude. There we go, Kyle. Exactly. Exactly, right? So, since we have evidence, right? We have evidence based off the release that we are short-term risk on, which caused the dollar to drop because, again, it dropped because people were liquidating the dollar and they were putting it into something else, which caused the demand for the dollar to decrease, which made it drop. So, yeah, overall, we could very well, in my opinion, experience short-term risk on sentiment from a fundamental and a sentimental perspective. So that's something to keep in mind, okay? Now that we got that out the way, let's go ahead and really look at this thing from a technical perspective, right? Do you guys see how I did that, family? Right? Do you guys see how I did that? Before I even marked up a chart, before I even looked at it from technicals, I'm in my head debating on what the best approach will be from a fundamental and a sentimental perspective first. You see how much of a difference that is from the way that I at least start trading compared to pretty much everybody else here on YouTube? When other traders come on here, they're going straight to the charts. No type of understanding of fundamentals, no none of that. And I get it. You know, again, some traders do see success, right? Shout out to them. I mean, I love it, right? Listen, I love seeing people win, especially in this space. I love it tremendously. It makes me happy. But I also know more times than that, a lot of people here are capped. A lot of people here are just really not doing it as well as they are. And I could tell just because of how they trade. And again, I'm not saying that I'm the best at all. I'm not no guru. I'm not. But I am very educated in this space. All right, I've been doing this now for a while. Right? Literally for a while. Almost literally 2-3 years shy of a decade, right? I put in 7.5 years into learning this. And I've been doing it full time for the past 4 years. So again, I know exactly what it takes. And I also know that it's extremely, 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 extremely hard to really do this full time, solely relying on technicals, right? So I always got to make sure I get my fundamental, sentimental perspective first, because when I do that, that is me trading with smart money. Okay, let me say that one more time, right? Because this is the sauce right here. When I trade with smart money, I'm doing it from a mental perspective, right? I'm doing it trying to think like them based off the data that the market is telling us. It's that simple. That's my way of reading smart money and trading with smart money. Because smart money is making decisions based off the data. Let's be real here. Smart money is making decisions based off the data and based off the sentiment that comes from that data. Point blank period. So if I want to align myself with the biggest banks, the biggest institutions, the biggest traders, the biggest investors, the biggest hedge funds, then I need to think like they think. I need to understand exactly why they're going to do certain things in the market. And more times than not, you're not going to get that type of information from reading technical analysis. You have to dig deep, look at the data from a fundamental perspective, and understand how to correlate that data with current market conditions. Because market conditions change, right? You know, the way an economy looks can change. That's why you have to correlate with that current market condition that you're experiencing. So, just want to throw it out there, right? So overall, though, guys, something to keep an eye on for here with the dollar itself. You know, we did again see very, very massive sell-off here, very strong sell-off here for the dollar. This is actually its biggest drop that we've seen pretty much in a while, right? You know, especially definitely the biggest drop since we've seen this correction start. You know, we have experienced one of the bigger, deeper drops. Now, this is going to be the question that we have here, right? Because, again, short-term risk on sentiment is still what I believe. Overall, I think that the dollar itself is going to continue its dominance overall long-term because I don't think inflation is fully under control. Okay, I get it. You know, the actual release came out at 8.5%, which shows that it's finally starting to turn around. But if we really take a look at this actual CPI data, guys, and we really take a look at what has actually been happening, There's been a few times, guys, during this run of inflation that we've seen for the past year, 2 years now. There's been numerous times where we did see price actually seem like it wanted to actually plateau and turn around. All right, let's go actually zoom in real quick, and I want you guys to see this, right? So again, we really started to go higher around May, right? May is really where it started to pick up. We went actually April, right? April is really where April we were at 2.6%. Then we went to 4.2%, then 5.0, 5.4, 5.4, right? And then we actually seen a little drop to 5.3, right? Again, typically when we see a little drop, that's going to bring a little bit of optimism in the market, right? So back then at 5.3, analysts on TV, a lot of these analysts on social media, they're saying, oh, yeah, inflation's under control. We're starting to see it actually decline. And the market said, nope, gotcha. That's what you thought, right? And then we just continuing. And the most recent one, guys, is that it's probably going to be, what we're experiencing now. This is probably going to be similar to what we possibly see, right? Again, this is just my opinion. Like I said, I could be completely wrong. And if it is what it is what it is, right? But back in April of this year, we actually had CPI reach all the way up to 8.5%. At this point, again, the news is going crazy. Everybody's panicking. It's all over social media. Everybody's talking about inflation. And then we started actually raising rates. We started to see the market, or at least the Fed, start to tighten up monetary policy overall to try to get this thing to slow down. And then we actually did see, a pullback here in CPI in May, right? It went from 8.5% all the way down to 8.3%, which again, at that point, once again, everybody was saying, oh man, the top is in. Inflation has finally found its peak. And then what the market do? Said, nope, got you once again, buddy. And then we finally went all the way up to pretty much record highs, right? So again, even though this time right now, guys, was a much bigger beat in projections here, we also have to take into account other data and correlate it with what we're looking at here as well when it comes to CPI, right? So yeah, we had this drop in numbers, but what did NFP just come out 2 weeks ago? Actually, last week, right? Did NFP come out stronger or did it come out weaker? Answer this in the chat, fam. Who remembers what NFP came out, right? Because again, NFP is definitely going to play a role in inflation as well, right? Anything to do with employment, job numbers reports, those all are also going to play into inflation, right? And trying to control inflation, right? But last week, we had NFP, right? Non-farm payroll, which measures pretty much the number of employed people across the board. Now, NFP actually came out way higher. Like, it actually beat projections by a lot. It almost doubled what analysts were expecting, right? Analysts were expecting around, what, 2.25, 2.5, I don't know, 250,000, 225,000. It came out at 500,000, right? That's a major beat in projections. That also caused the markets to gain some type of strength. But this is where I'm getting at with this, family. And this is where we have to really start to correlate all the type of releases, right? If you really want to trade the rumors, you have to start putting 2 and 2 together, right? So yeah, we had right now CPI drop, shows inflation is actually decreasing. But last week we had a massive beat in job numbers, which means we have double the amount of people that just got employed, right? The professional analysts were expecting. Now, if we have more people that are employed, what is that going to do across the board? Right? That's going to literally mean that we now have a lot more people that are going to have access to money. Right? If people are employed, they have access to money. When people have access to money, that means more people are going to be spending money, right? Consumer spending is going to increase because now there's going to be more people that have access to money because they're getting a paycheck. Guys, this is not helping out with the Fed's mission, or at least the jobs number really wasn't supposed to help out the Fed's mission of lowering inflation. Because just like Kyle said, shout out to you, Kyle, right? The more people that are employed, that means the more money that is now going to be able to be spent, which is only going to continue to cause the price of goods to increase. So yeah, we did see a little downtick, 8.5%. But again, I fully believe that this is probably not going to be here. And in fact, I believe we're actually going to eventually see this thing rebound. I could be wrong. And if I'm wrong, it is what it is, right? But that's definitely something I'm just keeping in my mind, guys, and keeping my eyes on for sure. I'm going up into pretty much just finishing out this year, just seeing how this honestly starts to rebound. But with more jobs, more workers, means more spending, that's not going to help inflation at all. So, again, I think that we do see this thing finally start to pick up again. All right, so that's just something to keep in mind, guys. More jobs, more spending across the board is going to cause inflation to continue to increase. Pretty much, yeah, the price of goods is going to continue to increase overall. So that's just something to really, again, just to think about, guys, and really consider overall. Let's see. IRS just hired 87,000. That is true, right? The IRS did just literally hired a freaking boatload of people, right? So, yeah, that obviously played into it for sure. But, yeah, it was a major miss. But you got to be able to put all of this data together, right? And when you do that, then you really start to think like the banks, and you can really start to operate like the banks as well. Right, so now when it comes from a technical perspective, guys, very, very quickly, though, for the dollar, again, I think that there is a chance for price to really rebound and continue lower, or there's also a chance for price to rebound to the upside and then continue its dominance. For right now, I'm probably going to be sticking short-term, again, risk on. So right now, I believe we can experience dollar weakness, okay? We did get a pretty interesting reaction off of this level of structure that we're currently at. You know, this, in my opinion, could be more triggering a bullish reaction just because of how we ended up closing. But for now, I'm going to stick with short-term bearishness, guys. And if the market just gives a strong strength, then that's fine. I'll accept that, right? Because then the next day, I'll just start looking for buys once again, right? Because if we do end up closing above this bearish candle right here, then we're definitely going to go ahead and come all the way back up to the highs, right? But right now, I don't think that we're going to do that. I think we're actually going to experience a short-term pullback, and then we could possibly go ahead and experience maybe a deeper correction even down to, say, around this 103 level, right? So, you know, that's just a possibility, right? Something to keep your eyes on, something to really see how the market reacts from. But overall, yeah, you know, I'm just right now just expecting a little bit more short-term bearishness for now, right? And I know that definitely is a different tune than what I've been pretty much preaching to you guys, because you guys know I've been bullish the dollar for damn near, I mean, forever, it seems like, right? But yeah, overall, I'm just, you know, we got to change when the data says, what did I tell you guys yesterday? If the sentiment does not change, we stay with the trend. Could we make an argument that the sentiment has now just changed, even if it's just a short-term change in it? What do you guys think, family? All right, remember my favorite quote. If the sentiment of the market does not change, you stay with the trend. But can we make an argument now, based off the data, that the sentiment has possibly changed? Remember, all of this is risk off sentiment. Right? Yeah, we had short periods of risk on. These little pullbacks are all risk on sentiment type of plays. But now we actually have some data to back the fact, right, that we could experience some more bearishness. So overall, I think we could see a little pullback, but then I would like to see price come back down to around the 104. And then off of that 104, we'll see how price reacts, possibly even reaching the 103, 102. Now, if price says, nope, Abel, forget all that. The dollar's still daddy. The dollar's still in control. And it rebounds and it actually closes and breaks. It breaks and closes above 106.5. See, now, if we're above 106.5, see, then we can realistically expect the market just to rebound and continue that overall trend. It's just something to consider, guys. Again, us as traders, like, our job is to create sentiment, figure out the sentiment overall, figure a bias, and then just ride it out. Let's see. Unemployment is a lagger, but if it increases coupled with CPI number, we might have a change in sentiment. Oh, yeah, that's a good point. Yeah, that's what they want us to think. Yeah, you never know, 20 pip, right? And that's what I'm saying. Like, even looking at this for right now, I'm going to stick with what I want to stick with, right? So I think we can experience some more short-term bearishness, right? I would like to see price down here. But I could be 1,000% wrong, right? I really could. But the whole thing is, right, is trying to buy down here only makes sense if you're getting it at like the extreme lows. Right? Trying to buy really only makes sense if you're getting it at a super low level, right? Where the risk to reward makes sense, right? It makes that trade or the chance of the trade, it actually makes it worth it. But right where we're at now, not really. Right? And the only other option that we have now, in my opinion, would be to see if we can continue in this bearish trend. We have the momentum. We have the data that could possibly hold weight. We have it. Right? Now it's just a matter of seeing what the market ends up doing. So then go ahead and ride lower. Okay? So overall, like I said, very interesting levels, guys. Very interesting moves. Very interesting data overall that we actually experienced. And yeah, the markets could definitely be setting up for something bigger as well. Right? But that's what I'm leaning in. Again, I think we're just going to experience something maybe like this, then continue going lower. And as of now, I'm just going to keep that bias until we either have some more data that comes out that changes it, or we just see from a technical perspective, we actually see a break of structure. All right. And then from there, I'll be like, all right, you know what? The dollar's just too strong. You know, let's go back bullish for now. All right. But that's just how I'm going to be approaching it overall. Let's go take a look at the markets, guys, and see what we can ultimately really come up with now. Right. So with that said, I'm actually going to be taking a look at EURUSD, guys, and seeing what the market ends up doing for the euro. Now, again, on the daily time frame, I'm not going to lie, this stuff does look like extremely, extremely bearish. Right? Like euro looks extremely, extremely bearish here on the daily time frame. But I don't know. Something is just telling me. You know how you get those feelings, right? As a trader, you're going to get to a point in your trading career where you have enough experience of seeing things and reacting to things, right? That where your gut feeling is just going to tell you that the market could potentially do something at a higher percentage rate than something else, right? And I don't know. For me, I just think there's a good chance for us to rebound off of this level of supply, you know, and push us maybe up into this area of structure up here for the euro. Like it just, in my opinion, that's what my gut feeling is telling me right now. Just based off of, again, the data and how the market is reacting or responding. So how I'm going to be playing going into tonight, guys, for the euro, right? If this is one that I actually decide to end up taking, yeah, I will be looking for see how price reacts around the 1.02 level, right? Once we get into this 1.02 area of structure down here, then from there we'll be able to go ahead and find an opportunity to go ahead and possibly, you know, cash the next move higher. All right, so that's pretty much how I'm approaching this, right? For the EURUSD, it doesn't look bad. Now, again, if the market just says, nope, Abel, you're screwed, forget that, and we actually break below this level of structure, see, then I'm taking that as evidence that we're actually going to go change, and I'll just look for the sell instead after that point. All right, but again, the sell is only if price ends up not respecting this level. Okay, because as of right now, we have evidence that the demand for the euro has picked up at around the 1.02 level, 1.022 level, right? So there is a chance for the demand for the euro to pick up once again once we get back into that same exact zone, right? Trading very simple. Supply and demand is as easy as it gets as a trader, and just understanding it is also, you know, just crucial and key to this whole thing. But I like the opportunity, guys, right? I want to see price come into here, you know, anywhere below 1.023. In my opinion, is a good opportunity to go ahead and look for some longs. All right, maybe something like this to go ahead and target all the way up to around, yeah, all the way up to around the 1.04 level, which is not a bad setup. It really isn't. All right, we're talking about a 5-to-1 risk to reward. You cannot go wrong with that at all. You know, so I'm gonna keep this one on my radar, guys, EURUSD, and we'll see ultimately how this one ends up coming out. All right, let's go take a look at AUD USD and see what AUD USD is doing. All right, so AUD USD was actually very interesting, guys, right? Because we actually had an entry, or I was looking to short AUD USD. Where was I looking to short it from? I believe it was from like up here. All right, I actually didn't take the trade, but I know we had the setup pending. All right, so we had an entry looking to short this right up here. Market really went up there, and then it ended up dropping around 50 pips before obviously the news came out and just absolutely sent it flying. All right, so that was very interesting for the Aussie. Now again, guys, I do think, again, I'm just riding, risk on sentiment right now until data changes it. So if for whatever reason we're able to see price come back down into this area of demand that we have down here, that would be pretty lit. Maybe a move back down into this level of structure, guys. We can potentially, go ahead and look for a move to bring us back to the upside. Because just looking at this thing from a bigger perspective here, I would not be surprised if AUD USD actually did end up coming up towards, this whole level of structure right here, right? It just looks like a very attractive level for us to actually reach towards, right? So I think that we could see AUD USD reach up to 0.71 levels probably very soon. I mean, now that we have signs of strength to the upside, now it's just a matter of letting price do its thing, come back down into an area that makes sense, area of demand, and then we go ahead and enter and ride that higher. Okay, but right where we're at now with AUD USD, in my opinion, I mean, I have no interest in it. So I'm just going to see if price can get down here, and then if it does get down there, I'll go ahead and start to look for some opportunities to go ahead and buy. All right, so that's what I'm looking at for AUD USD, guys. I do think that this is going to be a good opportunity as well to take advantage of for sure. All right, let's see what else we got here. All right, so that's Euro USD, AUD USD. Let's go ahead and take a look at USD JPY. All right, so UJ, again, another very, very interesting play here. Obviously, just like everything else, during the data news release, this thing just absolutely tanked. Dollar weakness just absolutely came in. And now we're at a point where what can we expect next, right? Well, again, I think dollar weakness can potentially, again, stick through. Remember my bias. My bias is risk on, which promotes dollar weakness. Risk on promotes dollar weakness. So if we're able to see price make its way back up here, right where the momentum started to pick up, right? I want to see if we could look for an opportunity to go ahead and go short once again. Right, somewhere up in this range. Right, somewhere up in this level up here. Right, is where I'll be looking to go short. Because again, I think we have more downside here for UJ. And I think we can get a nice reaction from where we clearly had evidence that there was a lot of selling pressure before in the past. Right, so if we had evidence in the past of that selling momentum picking up, we can expect it again in the future. All right, so this is a very, very good looking setup here, guys, for UJ as well. So if we're able to go ahead and, get up into that level, and these are a little bit higher time frames, 4-hour, daily, 2-hour time frame setups, but, overall, they are looking very, very juicy and very attractive, right? And especially after experiencing data, family, whenever you go through a period of actually looking at news and getting news releases, always make sure to take a quick look at the bigger picture, right? Especially after news was released, just so that you can get an outlook of what the bigger picture ultimately is doing and what it's telling you. Okay, so yeah, overall though, I think this is a very, very good opportunity here, guys, for UJ overall. It looks good. It looks juicy. So yeah, that's what I want to see, right? All right, so let's go ahead and see GBP USD, right? Again, very similar to everything else, guys. A lot of these dollar correlated pairs are all going to be very, very identical, right? If I'm expecting short-term dollar weakness, right? Dollar weakness, very simple, right? Anything that ends in USD, all right, should go up. Anything that ends in USD should go up. Anything that begins in USD should go down, right? Very simple correlation, guys, when we're trying to use a dollar as a reference to try to figure out, right? So if I'm expecting dollar weakness, then anything that ends in USD should eventually increase in value, right? Anything that begins in USD should decrease in value. So for GBP USD, I'm expecting short-term moves higher based off of the data and based off what I think the actual sentiment is of the market as a whole, right? So that's pretty much as simple as it gets, guys, when it comes to trying to figure out sentiment. All right, so let's take a look now and look at this thing again. The daily time frames for a lot of these patterns are really not helping out these short-term biases, but we're going to stick with what the market is showing us, right? So yeah, overall, like I said, for now, this level down here, the 1.21 level, guys, could be a decent opportunity to start looking for some moves higher. We do have a very interesting level that I think we could realistically go ahead and reach towards. I really believe price can reach this 1.25, and that's a very long ways to go. It's around 500 pips. So, you know, if you can get an entry on GU and the trade does play out in the favor that we'd like it to, you know, then yeah, you can really get yourself a nice bag here, right? Again, a 400 or 500 pip trade, not a bad opportunity, right? Especially when the risk to reward is just going to be absolutely outstanding. Okay, so GBP USD looks good. I'm just not interested in it unless we actually come down into here, right? If we get down into there, I'll see how price action is doing. If we start to see some type of momentum shifts, then I'll go ahead and get involved, right? You know, very similar to what we actually looked at, guys, earlier. You know, so I actually did, you know, the CPI release. We actually watched it live earlier today. Shout out to all you guys that are actually part of that actual stream as well. It was a very, very saucy stream, very knowledgeable stream. If you guys did not watch this morning's stream, guys, I highly recommend you guys to do it, just so you guys can see how my thought process was during the actual release of the news. I feel like you might be able to get some value from that, right? But speaking with that, you know, there was actually an opportunity, guys, that we decided to actually take a look at and actually grab off of the release, and that was gold, right? So gold right now has definitely turned around and started going bearish. But overall, based on the release, guys, right, we actually seen gold literally do this entire big move. And then we also seen the entire correction. But what I did tell everybody on the stream was that if price came down into this range, right, if price came down into this range right here, that can be an opportunity to go ahead and go long. And then we eventually seen price get into that level, and I ended up taking a trade, right? I ended up buying gold. I know a few of you guys also bought gold as well with me. Right, some of y'all did, right? And then price ended up going up, I mean, easily 100+ pips, right? Before it finally ended up turning around, right? It turned around, I believe, right there it was. But I ended up closing out around 80 pips, right? So I ended up grabbing around 80 pips, guys, on this gold opportunity. I had two positions, so I ended up closing out one at 80 pips, and I ended up getting stopped out on the other one at break even. But overall, it was a beautiful freaking trade. Honestly, very, very simple, quick opportunity here. And it played out good, right? Now, obviously, the end of the day, gold just absolutely just tanked to end up closing out the day overall. But yeah, when we were looking at it in real time, you know, it looked good. It looked juicy, and it was something that I was excited for, right? So, but what can we expect now for gold, right? Like, what is overall, what can we expect for gold moving forward? And how can we position ourselves? If I'm being honest, I'm still very much, in my opinion, guys, I think we are still experiencing, or we could experience still some more downside for gold. I think, personally speaking, that we could see gold probably now at this point, based off what we're seeing, probably make its way all the way back down to around at least the 1715, 1710 level, right? Back down to these lows down here. I really think that there is a chance for price to make its way, weasel its way back down there, right? And based off of what we're looking at, guys, in terms of like structure, price action, we are starting to see a slowdown in momentum. Let me give you guys some sauce real quick when it comes to reading price action, right? So we can see that this level right here, guys, that has the box is a very, very, very interesting level, right? This level has acted as numerous levels of supply and demand, numerous levels of support and resistance in the past, numerous times, right? So this is a key level. So when we have areas of structure, guys, that are quote-unquote key levels, all we need to do, if we want to identify whether it's time to get into a trade, we have to read price action, right? So look at this move that we have out of here. We've seen a very strong move higher, and then we've seen a short correction. Then we've seen another high be created, right? But look at how shallow or how short these highs are being created, right? This is what we're talking about with learning how to read price action in the markets. Right? Being able to read how price is acting around key levels. Okay, because we can see right here, yeah, we're technically still creating these higher highs and higher lows and higher highs and higher lows, but we can clearly see the momentum is starting to slow down, right? Because look at how close these peaks are to each other, right? Especially near a key level, that is showing us that momentum is slowing down. So when it comes to reading price action, that's how we read price action, guys, around key levels. What is price actually doing? It's starting to slow down. So now all we really need here for gold, realistically, a sell up here for gold would have been a freaking great trade if you would have been able to get in. Why? Who knows why this would have been a freaking phenomenal trade to go ahead and get into? Who knows why? Answer this in the chat. I just gave you guys a clue too. All right, I just gave you guys a clue. Let me actually go ahead and catch up with the comments as well now, right? Shout out to all almost 200 of y'all. I appreciate every single one of y'all that's rocking with me tonight. If you guys are getting some value from this session, all I ask from you is to go ahead and smash that like button as a thank you. I definitely appreciate you, and I look forward to seeing you on my streams moving forward, because we do these sessions every single Monday, every single Tuesday, Wednesday, and Thursday, guys, at the same time, every single night, right? So I look forward to seeing you guys there with me on every single stream, especially if you want to learn more about fundamental and sentimental analysis. Technical analysis is extremely easy. That's the easy part of this whole thing. But I want you guys to be more aware and educated, guys, on fundamental and sentimental analysis. So if that is you, I highly encourage you to go ahead and subscribe to the channel as well, so you get updated on every video that I do drop and when I go live. Right? If you guys want an update, family, on when I actually go live, and if you want to receive an email of when I actually go live, go ahead and turn notifications on as well for my channel. All right, so let's see what else we got here. Let's see. Unemployment is low. Let me see. Yesterday only gold retraced for entry. Again, how did you monitor the gold in 5 minutes? Because in 15 minutes or 1 hour, it did not retrace, only in 5 minutes to give us in discount. Or I mean, I pretty much just broke down pretty much my outlook on gold. Right, and I'm going to continue breaking it down even more. Let's see. This is called sentimental analysis, right? If the market is all feeling one way, you should feel the other. Not necessarily. It really depends, right? Because there's different tools out there that measure sentiment. So if you're trying to trade sentiment, say off of if I just type in, right, sentimental analysis, right, we're gonna start to get a whole bunch of different tools that really break down sentimental analysis, right? But the one most common tool that we see is usually something like this. Let me see if I can find it, right? This right here. And this is the one that you want to do the opposite of. Okay, if you want to look at the market, guys, and try to look at these type of tools, these market sentiment tools, then these are the ones you want to trade against, because these are tools that are giving you sentiment from the retail community. This is giving you retail community sentiment, and we know that the retail community is not profitable. Okay, so when we look at these markets and we say, let's see if we can find something that's overly aggressive, right, compared to something. Let's see. Right, so like USD Swiss. Right now, the overall bias, right, is that it looks like it's leading towards bullish. Or, no, bearish, I mean. Right, overall sentiment is bearish. Okay? Overall sentiment is bearish for USD Swiss. Let me see. Where's that? Where's USD Swiss? Yeah, so the overall sentiment right now is looking bearish. Is it? It's saying bearish right now, but it's actually showing that it's more so actually a lot more bullish than anything. Right? But just to keep it simple, guys, these tools to try to use to determine sentiment is not the way to go. Normally, you want to trade opposite of these tools right here, right? If you want to use something that can help you with sentiment, I want you to go ahead and type in the COT report, right? COT reports and things like that. That can give you massive sentiment, right? I'm not going to get too in depth on what the COT report is and all that good stuff, right? Because that's something you guys can research on your own. Or for all of you guys that are going to be a part of the boot camp on Monday, I do specifically break down this sauce right here as well, knowing how to look at the commitment of traders report to really identify sentiment overall, right? But this is really where you want to identify sentiment, learning how to read this, right? Which again, I'm not going to get into right now, but knowing how to read this is going to tell you what the sentiment is, right? So let's go ahead and just take a random ass. Let's take a random currency, right? Let's look at the Swiss franc, okay? So if we look at the Swiss franc, right, we can see, and like I said, I'm not going to get too in-depth with this, but we can see how many traders are long, short, right, and what type of traders they are. Once you understand which one of these assets or which one of these actual players in this thing right here are the big banks, the big institutions, You can actually see what the big banks and the big institutions are actually doing. And then align yourself, right? So again, that's what I will use. If I'm trying to figure out sentiment and actually look at like a chart, I'm going to use the COT report to go ahead and identify sentiment, right? So that's just something else to do, right? Again, if you are going to be a part of the boot camp, guys, next week, I do break all this stuff down in depth on the actual boot camp. Like I talk about the COT reports. We talk about the different COT reports that are out there. Which ones? Just trust me. Shout out to all y'all that's going to be a part of the boot camp. It's going to be absolutely next level for sure. Guaranteed. Guaranteed next level. All right. So now the question that I had initially asked, guys, before I just ran on that little run, right, is why should we have expected gold to sell off from this level? Well, it's because we have an area of supply, right? As supply and demand traders, you only take trades at areas, at extreme areas. It's either going to be extreme highs or at extreme lows. Because now when you're trading off of supply and demand, major levels of supply and demand, you really don't have no interest in trying to jump in the middle. You're going to wait for price to either get to the highs or get back to the lows to look for that opportunity to go ahead and get in. Now, once you get experience with trading, yeah, right? As you get an entry off of an area of supply and demand and as structure starts to move, right? Like, yeah, you can have an entry there, and as structure starts to go, say we get a pullback, yeah, you can find other areas of supply and demand on the smaller time frames and look for those as re-entries. Yeah, you could do that all day long for sure, right? But when you're like first trying to get into a trade and you're really not understanding of where to enter at, just look at the swing moves, look at where the momentum started, right? We know that this is an area of supply because this level of structure right here is where the momentum to sell, right? The selling pressure for gold absolutely went bonkers. We could tell that big institutions were selling gold at 1809, 1810 because it's showing us on the chart that price was that everybody was selling. Okay? So if we had this much selling pressure for gold in the past, right, there is a chance for when price comes back up here in that same level that we get a similar reaction. And that's exactly what we are seeing. All right, we're seeing price react in a very bearish manner off of this area of supply, which means this price point up here around 18, let's just say in the middle, right around 1808, 1809. That is an area where a lot of traders and investors are now exiting their gold positions and they're going back into the dollar itself. Okay. So what do I think gold can do now? Right. Again, I think we can realistically see this thing continue. Like I wouldn't be surprised because if we see gold continue. Right. So what I'm going to be doing going into tonight, right, is if we're able, that's me, right? If we're able to see price rebound back up into the 1795 level, not 1796, then that can give us an opportunity to go ahead and get involved and look for continuations. Okay, so 1795, 1796 level, guys, look super, super attractive for some gold sales coming up probably tonight, tomorrow, whenever the case may be. Right, but that's what I like. It definitely looks good. I like it a lot. So this is probably going to be one of my favorite setups going into tonight. And yeah, we'll see how that one ends up playing out for sure. All right, that's where we will look out for sure. I see. You know how writers have writer's block? That's where I'm at, trading block. You know what's crazy? Like Quet Pips, like it actually does happen, right? Like I've been through a ton of periods throughout my trading journey where I feel like I had trader's block, right? Where I just feel like I could not understand the markets at all. Like I didn't understand at all what the hell the markets wanted to do. I couldn't figure out the direction. I couldn't figure out nothing. So trust me, you're not the only one that has experienced that. I think almost every single trader in this world will eventually experience trader's block. I actually love that you call it trader's block because that just sounds lit, right? But yeah, every trader experiences it. It is what it is. Whenever you do experience things like trader's block, something that helps me is just going to higher time frames, right? Going to higher time frames usually at least gives you the basics of what the market could do, right? And the basics is just trying to figure out the direction, right? And usually going to higher time frames, you'll at least figure out what the direction is again. And then from figuring out what your direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the direction is of the market, you'll at least figure out what the then use that to figure out how to actually get in, right? To stay with the direction, right? So just simply going up a time frame has helped me out with Trader's Block tremendously, okay? Tremendously. And realistically, I'm going to say this too. Another thing that has tremendously helped me when I do go through periods of Trader's Block or periods of losing streaks or whatever the case may be is to take a step back from the charts, right? I've had some crazy trading days. I had some crazy trading weeks. I had some very, very phenomenal trading months. But the crazy thing is, a lot of my biggest trading days, biggest trading weeks, and biggest trading months have all come after I taken a period of time off the markets, off the charts. Right? Especially as a newer trader, where all we're doing right now as newer traders is we're just trying to consume as much knowledge, as much information as possible. Right? That's probably what a lot of you guys are doing, right? So I get it. I've been there too. That was me. But taking a day off, a few days off, taking a week off if you have to, can definitely help out. Right? It can clear your thoughts, allow yourself to clear your thoughts. Especially if you've been experiencing like losing streaks and things like that, take some days off. The markets are not going anywhere, guys. Right? They're always going to be there. All right? So that's just something to really take into consideration. But yeah, we've all been there. We've all been there for sure. All right, let's see what else we got here, man. Shout out to every single one of y'all that's rocking with me tonight. Again, I appreciate y'all. All right, we are deep tonight. All right, so let's see. What do you think for tomorrow's release about unemployment? Right? That's actually a good question. All right, because we do have the initial jobless claims that comes out tomorrow. Okay, so this is going to be very interesting. Again, we have just been seeing this number increase and increase and increase. And there is a possibility that we do continue to see the initial jobless claims increase. Again, this just measures the number of unemployed people, right? And I think that there is a chance. But based off the actual reading that we just seen with NFP, which measures the number of employed people, right? I would not be surprised if this actually, came out pretty much close to forecast or even probably lower, all right? But again, I don't know, right? We'll see how it plays out tomorrow. And based off the actual data tomorrow, right, we might be able to actually find some opportunities based off that current sentiment that we get from that. But on top of the initial jobless claims, guys, we also do have PPI coming out tomorrow as well. Now, PPI is also a very important news release, all right? PPI, Producer Price Index. It measures the change in the price of goods and services for the producers, right, the businesses. So yeah, seeing what PPI comes out as can definitely give us insight as well onto how inflation is going to be across the board, right? Because if PPI still comes out high, right, like as of right now, guys, from the month to month perspective, they're expecting a major drop in regular PPI, right? So that will be pretty much aligning itself with what we experienced with CPI today. But if for whatever reason PPI actually comes out strong, then yeah, that is not good, right? So overall, like I said, tomorrow we do have some reports that we can possibly trade. I might actually wake up with you guys as well, guys. Like I actually might wake up early tomorrow, and I might trade with you guys during this release as well, right? During PPI and initial jobless claims. That's one thing that I actually want to start doing with you guys on a consistent basis, is trading a lot of these major news releases with you guys in real time. Right, I feel like that would be super beneficial for everybody, including myself, right? So I think that would be something. But again, I'll let you guys know for sure. But I think I might end up trading with you guys tomorrow to see how the market actually reacts to that, right? But yeah, overall, who knows what it's going to come out as? Again, NFP really just screwed me up. That major beat in numbers and that major beat with inflation as well is definitely having me a lot more sidelines, just to try to figure out exactly what the market wants to do, right? But it could come out either or. All right, let's see. Let's go take a look at a few more pairs. Right, I see somebody said GJ. Let's go ahead and do that. I got you. Right, so GJ did exactly, guys, what we wanted it to. Again, this is literally an opportunity that we pretty much talked about last week and this week. And I told you guys I wanted to see GJ come down to around this 162 level, and then look for the long. And it really did just that. GJ literally came right down to that level of supply. Gave us a nice, decent reaction off of it. Price ended up going almost 80, almost 90 pips off of that entry, and then it did pull back. But I think we do still have, guys, some more upside here for, in my opinion, GJ. Right, I would love to see GJ go ahead and finally make its way higher. Right, so that's pretty much what I'm going to be betting for, is for pound strength against the yen to come in. And there is a good possibility for it to happen. Right, so I think that that's possibly what's going to happen, and that's what I'll be looking for. Now, if you want to be conservative with GJ, one thing that you could wait for GJ on the 1 hour time frame is this level right here, this 162.5. Right, you can literally just wait for a break above, close above this level as well, right? And then from there, we can look for more continuations, right? You know, so maybe something like this, right? A break above, close above, retest, and then we can go ahead and ride it out and catch this move higher, right? So that's definitely one way that you can approach GJ going into tonight. Just wait for the break, you know, wait for the break on 162.5 and then go ahead and ride it up. That's definitely very possible for sure. Okay, so that's something to look out for if you are interested in GJ. Okay, I would like to see the break of 162.5 to go ahead and continue higher. Right, let's see what else we got here. Let's see. That has been me for a while now. Traders block. Yeah, it happens. Like I said, it really does happen. All right, it really does. That's me, just a big block. Yep, it happens. Like I said, you know, it's I'm pretty sure 99% of us in here has either experienced traders block or are currently experiencing traders block. You know, it literally is all a part of the process. Let's see. What's up, Abel? How you been? I used to tune in IM Academy when you used to go live. My guy Antonio, what's going on, my brother? I appreciate you. I'm doing phenomenal, right? I'm doing better than ever, right? I'm having a really, really great year overall, right? So yeah. I'm excited for this path that I'm on right now, but I definitely appreciate you for rocking with me in IM Academy, and I appreciate you for rocking me right now, Antonio. It means a lot, right? Shout out to you. All right, let's see. Will PPI tomorrow affect NAS? Yes, it will. 120% inflation, right? That's crazy, right? I wouldn't be surprised if we do get something crazy like that, though. All right, let's see. Hoping it gets back to me next week. It's coming, O'Neal. Right? Just get your mind right. It's coming. Let's see, Abel, do you recommend traders incorporate right now or wait until the money starts rolling in? I mean, that's totally up to you, Yusuf. I recommend to definitely incorporate, though. Get an LSC. I recommend everybody, right? And this is, again, stuff that most people do not talk about. At least most traders do not talk about for some reason. But if we're treating this as a business, which is exactly what trading is, right? Trading is a business. Then we should definitely be, you know, trading business capital. Right, we should definitely be trading business accounts, not personal accounts. Definitely trading business accounts, just because you do get, you know, a lot of benefits when it comes to tax time, right? So I definitely recommend it. Is there a monetary number that you recommend? Is there a monetary number that you need to have before you get it? I don't know. That's totally just up to you to decide. You can get it now, whether you're, you know, when you're not profitable, if you want it, just to have it ready, or you can, you know, just wait till you start seeing more consistent profits. That's totally up to you. That's totally up to you. All right, let's see. Let's trade New York tomorrow. Okay, Roy Way. How many of you guys want me to wake up tomorrow and trade New? I mean, either way, I'm always up. It's just a matter of if I want to turn the OBS on, right? But how many of you guys would appreciate if I actually traded live tomorrow, right? In fact, you know what, Skaggs? Bro, I know you're in here, Skaggs, but you know what's crazy? I finally just figured out how we can actually be on OBS together, right? So we can actually pretty much both be on screen together, right? So what I can do, right? I could probably go live, but what I can do is I can also convince, you know, a few of my partners to also go live with me, right? Whether it be Skaggs, whether it be Ray, whether it be Kyle, right? My team. And we could really have some deep conversations, all right? We could really have some really, really deep conversations for sure, right? You know, so that's definitely something that we could potentially do. Because again, guys, like, it's not, yeah, this is me on my channel, you know, but I'm working with a team of phenomenal traders and educators, and we're working on a lot of major things, and I want you guys to get familiar with them as well. Because again, you know, they are just next level, and I feel like it'll be very, very next level for sure. All right, let's see. Let's see. Yeah, I see a lot of you guys love it. We trying to test it tomorrow? Yeah, let's definitely do it, Skaggs, for sure. Or I think we have to. Obviously, I have to ask my inner circle if it's okay, but I'm sure they don't mind. They won't mind at all. All right, they won't mind. Let's see, go live all day, 24-hour stream, right? That'll be pretty cool. You know what? I actually seen a bunch of traders actually do that, right? Shout out to, you know, Chart Addicts team. If you guys are not following, guys, the Chart Addicts YouTube channel, it is a phenomenal resource for you guys to get access to a lot of education, a lot of information, a lot of podcasts, a lot of interviews from your favorite traders. It's pretty dope, right? But they actually do that, right? They actually do 24-hour live streams for charity, right? So they literally go live for 24 hours, and they just collect a lot of money, and they donate it to actual charity. So You never know. That would be a vibe, right? I would be up for something like that if we did it for charity, right? If we did something where we're just saving up money and, you know, collecting a lot of money, we're going to all donate it to a specific location. I'm with that 100%, right? That would be fire. That would be a vibe. I can get my whole team on board as well. All right. That would be cool. All right. We'll talk more about that, guys. You know what I'm saying? But I like that a lot. All right, so let's see what else we got. Let's go take a look at EJ, right? I got you, Ermel. I got you. Let's go take a look at EJ. So, again, guys, GJ, I want to see the break and the buy before I buy anything. But let's go take a look at Euro Yen. All right, so EJ looks very, very interesting. Overall, we have, right? At least for now, over the past 2 years, we have just been seeing a lot of bullishness come in. But recently, we have been experiencing, guys, a lot of bearishness to come in overall for the Euro Yen. So what can we expect next? Well, Euro Yen is actually at a very interesting level. We are pretty much still trapped inside of this bigger range that we have here. You know, we had this swing low down here. We have swing high up here. And we're pretty much just trapped in between it. Normally, when I approach things like this, I normally want to stay with what the overall bias of the market is, right? We are still technically, at least for now, riding out with this bullish trend that we've been seeing. So there is a chance for price to rebound, right? But I don't think it's going to happen right now, right? I think that we're actually going to see more downside here for Euro Yen. And I'll be looking for shorts. I'll be looking to sell this thing, right? Me personally. Okay, now where can we sell it from? Well, let's go ahead and take a look at smaller time frames. Well, now we're on smaller time frames, guys, right? I want to see if price can come back up to one of these key levels. Okay, all these three lines on my screen, they're pretty much key levels in the market right here based off this range that we have. So price is usually going to react off of one of these key levels if we are going to go ahead and get the move that we want to see. The question is, which level do we have to, or should we pay attention to? Well, one way that we could do it to eliminate certain levels is to identify which levels are in the premium or discounted price point. All right, if we're expecting a sell, if we want to look for the next sell, should we be selling from a discount or from a premium price level, guys? Let me know in the chat. Should we be selling from a discount or a premium price level? Right? What do you guys think? What do you guys think? Let's see. I would love that. I missed this morning session. Okay, let's get it. Let me make profits for me first. Right? Let's see. Yes, sir. Trying to pass the challenge. Let's go, Jabari. Can you give a screen for the channel? Right? For the channel, you're talking about the chart addicts for sure. I don't mind bringing it up. All right. I don't mind bringing up the channel. Shout out to my guy, Roy. Like I said, you know, he's one of my guys. Right? But this channel right here, guys, again, he's the one that pretty much does the live streams for charity. As you can see, like if you actually go through a bunch of these videos, you're going to see the ones that he actually has like 24 hours long. And it's usually all done for charity, right? All done for charity, and then he just gives away. But as you can see, there's a lot of trading value here, you know, from a lot of popular YouTubers here in the space, right? Well-known traders. And I highly encourage you guys to go ahead and, yeah, take a look, right? One thing that I do recommend you guys to do as well, right, is to definitely go ahead and plug into this video right here, right? I'm plugging myself in. Absolutely next level video, guys, where I'm dropping a crap ton of gems, right? Like this video is by far probably the most knowledgeable one, the most educational one that you guys will get access to. So definitely go ahead and take a look at that one. Absolutely next level. But yeah, you know, shout out to the Chart Addicts team. I highly recommend you guys to go ahead and show them some love. All right, so the question that I asked though, guys, right, if we want to look for selling opportunities, we want to sell at a premium. We don't want to be selling at a discount, right? So anything below the 50% fib is considered discounted pricing. Anything above the 50 is considered premium. Right, so since this one right here is below the 50, that one is automatically, right? That key level is automatically not what we want to trade, right? This level right here, which is probably a level that most traders will want to take advantage of just because it's previous levels of structure, is not the one you want to probably be trading. All right, let me actually go ahead and I'm going to start using the background fill just so it's easier for you guys to see. Okay. So looking at something like this, most traders will probably look at that and be like, man, let's look to short from right there. right? Let's look to short. Man, look at previous levels of support can turn into a new found level of resistance. Man, let's go ahead and short it from right here, right? That's probably what a lot of you guys are thinking too. Like, Abel, what? That don't look good. I mean, it is what it is. I'm just not interested in it. Why? Because I don't get a good enough risk to reward, for one, to take a trade off of there. And for two, more times than not, these levels will be used to gather liquidity, right? And then we see something like this spike up, and then we see the actual move higher, right? Or move lower. So I'm not interested in anything below the 50. So that level is not the reason, is the reason why I do not want to take this level right here, right? It's just not attractive to me. But what I would be interested in, right, is if we seen price come up to around the 71% fib level, right? See, now somewhere up here is definitely a lot more attractive to me, right? Definitely a lot more attractive to me, all right? Something like this, oh yeah, all right? So if we're able to see price, guys, make its way up to around the 137.8 level, that's where I would be very interested in looking for some shorting opportunities here, guys, for euro yen, right? And we could realistically probably just target this level of demand, right? So we want to sell from supply and short and take profit into a newfound level of demand. Okay, so if we were to do something like that, we're talking about a 3-to-1 risk to reward. Even if we did have a much wider stop of around 50 pips, still giving us a 3-to-1, so that's not bad at all. For all of you guys that are a little bit more advanced, you can definitely fine tune your entry if you wanted to, like make it tighter, you know, by identifying evidence where we could potentially really give a reaction from, and just to fine tune your actual entry. That is something you guys could do as well. But yeah, overall, guys, I really do like this opportunity here for euro yen to actually go ahead and go short, right? So that's what I'll be looking for euro yen. Let's see, Abel, you're going to Fibonacci one of these days. I mean, I could go into it. Fibonacci is, I mean, it's a tool, right? It's just a tool that's used for confirmation, just like everything else. I could break it down for you guys. It really isn't that complicated. Fibonacci is just a tool that measures the correction of a move, right? So all we're doing when we place our fibs on this move right here is we're trying to see how much of the move corrects compared to this move that we just experienced, right? So if we correct up to this level, then we corrected 50% of this move, right? If we correct all the way up to these levels, then we're correcting 78% of the move. So that's all Fibonacci tools do, right? They measure the correction of a pullback. They don't help you predict a pullback. They just measure the correction of one. You can use it as confluence. Yes, I get it. But most people aren't even using it the right way, okay? So just a tip, guys, for all you guys that do like using Fibonacci. Again, I don't really use Fibonacci as much as I used to in the past. I haven't really used it as much at all. Like, I only use it pretty much to determine premium and discount levels now. But for those of you guys that do want to use it, what I do when I'm using it is I'm not just taking the 61.8 because it's the golden ratio. No, hell no. What I'm doing is I'm lining up my fib level with a level of structure or a level of supply and demand, right? I'm only taking an entry from a fib level off of a major key level of structure that makes sense, right? So around the 71% level, or a area of supply and demand. That's it, right? I'm not taking no other trades unless it lines up with something, right? Fibs have to line up with something. You can't just try to trade fibs on its own and expect to be, you know, winning trades left and right. No, it has to have some type of confluence with it, some type of other clues around it as well, and you need to line it up with some type of structure. Let's see, what to do, family? I'm traveling, but I'm here in Russia. You experiencing the madness. It's not like what our news says, though. Shout out to you, Oscar, man, and I'm definitely going to be sending some prayers for you being out there in Russia. Wait, are you on a VPN right now, by the way? I believe that's the only way that you can even access my streams right now is if you're on a VPN, right? Because didn't Russia, like, ban social media and YouTube and Google? Right? I'm pretty sure they did. All right, let's see. Michaela Silvestri one has crazy insight. Oh, yeah, I agree. I believe Michaela, isn't she the girl that works for the brokers? Didn't she like work for a broker or something like that? Because if that's the same one, then yeah, she has massive value for sure. All right, let's see. Appreciate you, Chief. You bought me to D-Lo, and now this. Let's go, Desmond. I appreciate you. Right, appreciate you for sure. Right, but family, again, overall, you know, the setups that I'm looking for going into tonight is probably going to be looking for this gold opportunity. If we can rebound for gold, I'm looking to short. and Euro USD. If we're able to see this thing be, go ahead and get into this 102.3 level, I'm also looking to buy off there as well. But overall, again, we'll take it day by day. That's all we can do as Forex traders. Keep in mind, family, trading is very difficult because of the day by day news and the day by day data that gets released. That's why trading is hard to actually do. So if we want to put ourselves in better positions, let's stay up to date with every single release. Put ourselves in a much better position. Right, but family, I do appreciate y'all. I love you guys. You guys were on fire tonight. We had smashed 200 plus viewers, and we were on it for a little while, so I appreciate you guys for that. And I will be back tomorrow, same time, same place. And I will also be live tomorrow as well during New York session to give you guys as much value as possible, family. So if you guys had gotten some value from this session, if you guys appreciate the session, family, go ahead and just smash the like button before we go ahead and get out of here. But that is going to be it for me today. And like I said, I'll be on tomorrow, same time, same place. If you guys are not in my Telegram, make sure to be a part of my Telegrams ASAP, so you guys are updated on every single thing that I want to update you guys on. And like I said, I look forward to just continue providing you guys with major blessings. So I love you guys. I appreciate y'all. Hopefully you guys gain some value on tonight's session, and I'll be back tomorrow. We'll give you guys some more. I appreciate y'all. Let's get it. Have a good one, y'all.